Hey, it's Michelle Loretto with B-Sage Consulting. I just wanted to talk to you about the EIDL loan, the SBA EIDL COVID relief loan that many of us business owners took on last year in the pandemic. Yes, payments are deferred and they continue to give us deferment dates so we can be pushing out those initial payments. But I'm here to tell you, start making those payments now. And the big reason why is your interest is accruing. So let me just kind of give you some numbers, and I'm going to also provide a little calculator here in the comments so that you can look at these numbers specifically for yourself. But if you took on $100,000 in the SBA EIDL relief loan at 3.75% interest, you are accruing a little bit more than $300 a month in interest, $3,600 a year. Times 30 years, you do the math, it just keeps piling on. You don't want to be paying this off for 30 years. So I'm encouraging everybody to start making payments immediately to start seeing that debt go away, okay? Now, another thing I want to talk about is a lot of you guys are sitting on that money, sitting on it for a rainy day, sitting on it for another pandemic, the economy crashing, whatever. So you may be sitting on $100,000 just hoping that you may or may not need it. It's there. If you are sitting on it, I'm going to encourage you to kind of start paying down that loan a little bit more immediately. And there's two reasons for that. The first one, as I just talked about, the interest is accruing and you don't want to be paying $3,600 a minimum on a $100,000 loan on interest every single year. The second reason is that money is a very specifically laid out by the terms of the contract that you signed to be used for operational expenses only. So some of you that may be thinking like, well, may want to make a big investment or buy a piece of property under the business or things like that, you won't be able to. I'm not quite sure what the audit procedures are going to be like from the SBA, but I have a feeling sometime maybe in the future, they may be asking for us to submit documentation on how the loan was used, which is a little bit kind of like a roundabout thing if you had to show financials. But if they saw you made a really large investment or purchase and your earnings weren't significant enough to make that big investment, they may put two and two together like, oh, well, you had $100,000 extra in cash and this is how you made, payment towards that commercial property space. So, keeping in mind that if it's only used for operations, if your business is back to functioning, and most of our businesses are back to functioning, you likely have the income now to cover your normal operations, right? So unless you're, very strategic with how you're using those funds and you have plans to use them for operations, if it's just sitting there, start paying it down. And so I am encouraging people that have that cash just sitting there to start making larger payments. I call this chunking it out. So your minimum payment may be, $1,000 a month or $500 a month. You can either chunk it out by doubling that payment every single month, or every quarter send, $5,000, $10,000, depending on how, much cash you have in the reserve based on these additional loan funds that you received. It's also a boom time in the events industry, so people do have more cash fluidity. That's for the person that's feeling a little cautious, and we all are feeling cautious. We've held on to those funds, myself included, because we don't know what could happen. But I would say that at some point, having a reserve that's in excess of, that loan isn't really serving you if you're paying hundreds of dollars of interest every single month. So this is where I call it chunk it out, send an additional big payment every quarter, and so you're not looking at a 30-year repayment plan, okay? Now, what if you did use those funds and they don't exist anymore? And that's the case for many of us as well. So if those funds don't exist anymore, again, I encourage you to start making payments now, and you will have a minimum payment over 30 years. It's pretty, tolerable to make that minimum payment. But I would encourage you also to start, chunking that out as well. Even if you don't have that reserve in cash, try to find, a little bit more every month. So if your minimum payment that's required by the SBA is $300, send in a $400 payment monthly. Again, you don't want to be on the line for this for 30 years. You don't want to have all that interest that you've paid over the life of that loan, okay? I will provide some resources where you can start making your payments. You need to start doing that now. Even if the government doesn't require it, you need to do that financially. It's sound and savvy. I'm going to give you guys a link also on how to calculate your loan amortization, little calculator that I found online. And if you want to join me for my next cash flow planning class, I will provide that link as well. And we can plan out those bigger payments and making room for this so that you aren't on the line for a long time. Thanks.